Hi, this is Peggy van de Plage, and today we have a wonderful guest. We've known each other for many, many years. I invested in his company, and it's Edrizio De La Cruz, the CEO of Arcus. How are you doing, Edrizio?
Hey, Peggy, how are you? So good to see you again.
Yes, so great to see you, and congratulations are in order. You're going to tell us more about Arcus' journey, but I think it's not a scoop. It's been a few weeks, a few months now that you sold to MasterCard, but congratulations, that's very, very exciting.
Thank you so much, Peggy, and thank you for your support all these years. Yeah, as you alluded to, we sold the company to MasterCard last year. So we're really excited to join the MasterCard family, really excited for everything that we're about to do now.
Yeah, quite the exit, and maybe we can rewind a little bit. Could you tell us more about, you started the company a few years ago, which I'm sure for you felt like a few decades ago.
Yes, indeed.
And can you give us more detail on the company and, the evolution up to you being able to successfully exit?
Yeah, certainly. So we started the company in 2013. We went through an incubator called Y Combinator in 2013. When it was just a small incubator, just like 50 companies at the time. And we launched out of YC. We were at the time Regali, and Regali was focused on remittances. Ultimately, we raised capital coming out of YC. And a big element of the capital we raised was being able to get capital through crowdfunding vehicles, which at the time was kind of innovative and new. But I think what that allowed us to do is kind of diversify our cap table by giving access to a lot of different folks who normally wouldn't have access to VC deals this early stage on. And just brought on a lot of great people that ultimately were able to help with intros to investors, intros to potential hires, intros to potential clients. And that was very beneficial at the time, because otherwise you would be siloed into just raising capital from your traditional investors. So that was very powerful. Ultimately we pivoted from remittances into bill payments, predominantly in Mexico, and predominantly as a B2B platform, which became Arcus. Ultimately grew the company to what became the largest digital bill payments platform in all of Mexico. 100 plus clients, 100 plus employees, billions of dollars in payments, and grew to a pretty large scale. And in 2021, we ultimately sold the company to be part of the MasterCard family.
Well, and I would say the pivot in business model was very much leveraging what you are doing in the B2C space and using the infrastructure, because initially it was about paying bills for the family abroad, which was something that was very appealing to me, because I'm myself an immigrant. So I can see that sometimes you don't really want to send money. You're happy to pay the bills, but you don't want to send money. So it was very, very attractive to me. But also I'm a banker by background. So everything I look at B2C, I obviously look with the B2B side. So I think that was a great pivot to go that way. And obviously the exit with MasterCard makes it quite obvious. You kind of touch on a few myths also with your raise through crowdfunding. The fact that great people who were very helpful ended up investing, which is a bit, I would say, different from what people think. People tend to think that it's okay, retail investors who don't really know much will put a small check. I think you had very savvy investors who actually went through. It was WeFounder, I believe. You did your campaign.
WeFounder, and there was a couple of Funders Club as well.
Oh, Founders Club. Okay, I didn't know that. And so you ended up having good people in your cap table who were helpful, even coming through the platform.
Yeah, and I think those two companies did a pretty good job at the time as curating a subset of investors. And I think your job as a CEO is also managing up as well. you need to do a good job of managing up your investors and figuring out a very clear ask of those folks, something that's actionable in the network. If you see one of your investors is not in fintech or doesn't work in financial services, you can't ask them for an intro to a bank, right? You need to give them actionable, feasible, executable task, right? So I think that's also your job, right? To manage not only down but up. So managing your investors is always a job into itself.
It is, it's interesting because I work with a lot of tech entrepreneurs, and very often once they raise the money, you don't hear anything about them. Like, well, you want your investors to become ambassadors. And
exactly.
So to become ambassadors, first you need to keep them in the loop. And to your point, you need to be very precise with what you want, because very often it's a bit like, okay, help us. And you're like, okay, help. So what? Do you want clients? Do you want other investors? Do you want employees? Like you need to have these precise asks. Audie, and thank you, that's a very, very great advice, actually. How did you manage to have successful crowdfunding campaigns? So were you very active on social media to attract people, or were you pitching to your own clients? How did you attract actually the investors?
So the platforms that we used did a good job with that. One of them did a video, a very professional video where I was talking about my background and the company and the vision, the mission. And I guess it was compelling enough that it kind of drew a lot of interest. So all the kudos and credit goes to them because they managed that process. I did very little work as far as having to go out there and like I'm not that much of a public person. I'm not very good at Twitter. I have like 10 followers. I'm not very good at it. So the platform did a great job there.
Yeah, well, and maybe the fact that you were so early raising through platforms, you might have had, a white glove services because there were probably not that many companies on platform at the time. If I look at Cofounder, I think right now, just today, they might have 420 deals. So so it has really and also there have been some regulatory changes in the US in the last few months that allowed even more companies, which is great, to list, but it gets more difficult for investors to find the companies, and I'm pretty sure there is probably a bit less support in terms of marketing because there are so many companies. There is something I want to discuss with you, and it's diversity. It's something you're very passionate about, something I'm very passionate about. You are also launching a newsletter talking about VC fundraising as a diverse funder. Can you tell us a couple of things? First, your experience, and I'm pretty sure you experienced some hardship to be so passionate about that as well, and what you're doing with your newsletter and what you're aiming to achieve with that.
Thank you for that, Peggy. So I think my experience is, I think not unique and not unlike a lot of other founders of color. Up until 2020, it was kind of a moot point. It wasn't really talked about or discussed publicly. And post George Floyd, there was a serious kind of this tidal wave of initiatives around diversity. You saw funds like Andreessen, namely SoftBank raised a diversity fund that ultimately invested in Arcus. But by and large, there's always been a lot of conversation around diversity, but it's been mostly what's called diversity theater. And,
exactly.
The joke on that is that underrepresented founders are over-mentored, but underfunded.
I love that. Yes, it looks good. Oh, I'm mentoring that guy or that lady. Did you invest? Well, no, I agree with you. It's a lot of theater.
And it's different against what you did, like which actually you wrote a check, and like I'm ultimately appreciative of that. So it was very hard. It was very challenging. I think you always have to figure out ways to overcome those hurdles. And I've learned a lot of that, how to do that. And I just wanted to share those experiences, to share that knowledge with other founders so they can hopefully get to the same place I got to, but with a lot less bruises.
Yes, yeah, exactly. You know, that's the thing. I was reading a few months ago from one leader in diversity who was saying, he said, once you're at the table, make sure you don't close the door behind you.
No, you have to live as you climb.
And that's the thing that I see sometimes. And I see that diversity has many shape and form, but, with many underrepresented groups, we're not always very good at lifting up with us. And I think that's very important to think above and beyond our own ego, which is, well, I made it, you're going to make it with the same difficulty. If I can make things easier for people, that's great. If they're more successful than I am, because I help them, that's great. And that's the thing that sometimes can be difficult from an ego perspective.
Yeah, exactly. And I think that's what we're struggling today to see, like, how do we as a society, like, help the founders that are underrepresented thrive, independent of what success the folks that have already kind of reached a particular level have, right?
Yeah.
And so
the percentage of diverse founder that are funded by VC, I think it's a dismal 3% or something like that. Am I correct? Is it?
I know Hispanics are less than 2%
of
all
2%.
VC capital. Yeah.
So I think it's probably the same rule of thumb for probably the other group. So so I assume with that newsletter you're trying to not only help entrepreneurs to be more successful, I would think you're probably also trying to educate investors and VC in maybe being a bit more supportive, whatever the world is. What is really the target market for your
the target is any aspiring or existing founder of color. Okay, try to give them the tools they need in order to succeed, and adding a layer of kind of personality. There's 1,000,001 blogs about entrepreneurship, but I wanted to add a layer of personality and some real stories as well. Like, these are the real stories. I'm not just gonna be academic in my approach. I want to this is a real problem that we encounter. This is what happened. This is how we approached it. And this is how I think you should approach it if you come across the same issue.
That's what worked for you. Do you, and I know I'm putting you on the spot literally, do you have one or two advice you can share right now while we're live recording?
Sure. In terms of advice, the journey is hard for everyone. Mm-hmm. It's much harder than it looks on TechCrunch or LinkedIn or Twitter. That's surface level. I am surprised to see how many successful companies whose founders are, like, I know them personally and are good friends of mine, have succeeded and struggle to the brink of of non-existence, right? So the struggle is real. The struggle is common. Keep at it. Keep fighting through. You will get knocked down before you get back up. And ultimately, if you stick at it long enough, you will succeed.
Yeah. And one thing that's, I absolutely agree with you. And that's a message I'm also trying to share, which is, Musk tried to sell Tesla. Google tried to sell itself twice. That gives you an idea that how difficult it was. We always look at the companies that have been successful. We don't see the difficulty of a journey. And you've been there, you lived it,
Yeah, and the average time to exit is 7 to 10 years. It's like that's not really talked about a lot. Like, I think when you go in, you should have that time frame. have that time. And a lot of companies don't. Well, think about the vesting schedule. The vesting schedule is 4 years.
Yeah,
and I think
exactly.
people think that in 4 years I'm going to be a unicorn. I'm like, no, it's, even if you don't get, like, it's going to take 7 to 10 years of your life to get this to a good level. And I think a lot of founders don't expect that, and then they're disappointed when after year 6 they're not seeing that much traction.
Well, and also all the sacrifice, like I've again worked with tech entrepreneur, and most of them had to use a second mortgage on their home, sell their apartment, the sacrifice with their partners, the children, because the 7-10 years, it's also many, many hours of working and traveling and all of that. And it's not only the length, which is way longer, but it's the intensity.
Yeah, exactly.
And the risk, and I've literally seen couples where the spouse is like, okay, I've done enough sacrifice, I already sold my house. I moved to a different city. I moved to sometimes a different country. At some point, I'm just like, I'm not interested anymore, So it's not just you, it's your entire family that become a founder.
Yeah, exactly. It's the analogy I always use is, it's a very American analogy. It's like being a running back in the NFL. You take a lot of hits to the head, and you could only do it for so long, because after that you get a concussion. So
exactly, yeah, you're absolutely right. What is the name of your new publication? I will obviously put it in the comments, but I want to make sure it's out there.
Yeah, it's pretty simple. It's edriciodelaCruz.com.
Oh,
first name, last name.
I like that. Are you publishing like as a blog, or are you publishing as under Substack or one of the many platforms?
Yeah, just a blog on my page. Yeah,
okay.
my page.
Okay.
I'm gonna get people to subscribe so they can get the newsletter every 2 weeks.
I do obviously receive it, but I was wondering, I was looking at the bottom, right? Oh, I don't see any Substack or whatever newsletter management actually. So, but I like Edrizio De La Cruz. That's an easy URL to remember. Last parting thoughts, advice, anything that you want to share with the entrepreneurs, or maybe also the investors at the end of the day? I always think it's good to speak to both. The investors need also to know it's a 7-10 year extremely intense journey. You need to know that before you invest in tech entrepreneur, So anything you want to share?
Well, I mean, so the aspiring founders out there, I mean, I know I alluded to the fact that it's hard, it's difficult, it is, as you mentioned, it's extraordinarily emotionally, financially, psychologically depleting. But here's what I say. I think in your journey as an entrepreneur, you will learn more about yourself and about life and about human psyche than probably any other career that's out there. Because here's the thing, you're constantly faced with the mortality of an organization, and it's on your shoulders, and you constantly have to figure out how to keep it alive. And when you have that burden on your shoulders every day for multiple years, you develop new parts of your brain that you probably wouldn't exercise any other way. So it makes you into a superhuman version of yourself. That's what I'm saying. So it's very much, a journey that gives you a sense of vocation that you can get anywhere else.
It's the hero journey, really, when you think about the Greek tragedy. And overcoming obstacles. It's your Odyssey,
So it is an Odyssey. It is an Odyssey.
I love that. That's a great parallel.
Yeah, that's on you. Yeah, that's exactly what it is. It is.
Well, it's because you explained the journey in the psyche that it makes me think about that. So let's say we're co-founder on the hero journey.
I like that a lot.
Thank you so much, Edrizio. Really, it was such a pleasure. Congratulations again, for your successful exit. Really, it couldn't, obviously, as an investor, obviously, but also as a big supporter, it couldn't have made me happier to see see that. So thank you again and congratulations. Looking forward to reading more of your newsletter and see what is your next hero journey.
Thank you so much, Peggy. Anything you ever need, I'm here.
Thank you so much. Bye, Edrizio.
Cheers. Bye-bye.